Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, July the 8th. I'm Eric Wilkinson, and yes, you very well may recognize me from mainstream media where I've talked about the economic data, the geopolitical environment, how that impacts the overall markets with my market analysis, and I do the same thing in these daily market commentaries. But on top of that, I'm talking about option strategies that I find to implement into my portfolio for any given assumption I've come up with through that market analysis. What I'm here to do is teach you guys on a day-to-day basis how real-life examples work out while we're trading. I don't want to give you guys trade recommendations. What I'm trying to do here is show you how a trader like myself on a daily basis goes throughout the trials and tribulations of trading for the most part. I do have some specific guidelines that I use in order to implement any option strategy around those assumptions, but it's up to you to come up with your market assumption, then kind of figure out which is the best strategy for that. And I go into details in my webinars on how to set those up. Here I kind of breeze over it a little bit. I try to go into some details as to how we stay mechanical and things of that nature, but I'm not drilling down on some of those nitty-gritty details. All right, so without further ado, let's get on with the economic data. Only thing we got today was crude oil inventories. Expected to continue that drawdown. So expectations was a drawdown of 3.2 million barrels. Well, we had a build of 5.7, so almost a 9 million barrel build there over what was expected. We would think that that would cause crude oil to crack this $40 a barrel area because it was kind of like looking, hey, we're starting to see some real recovery here. This is a bit of a wet blanket on that theory that people are out there driving and manufacturers are out there really starting to crank up production. Well, our production of products using the distillates is what I'm getting at, not production of crude oil. That's still really being cut back. So with that being said, we're still seeing those cutbacks and still seeing this build. That should cause weakness in crude oil. We're not seeing it as of right now. As a matter of fact, almost everybody's happy unless they have blue chips in their portfolio because the broader markets are up across the board. Crude oil, like I said, up 28 cents here, staying above that psychological level of $40 a barrel. I have the real line in the sand there being at the 50 Fibonacci retracement of 39.16. So anything staying above that 9-day moving average, which lines up there, bullishness for at least the short term, I would expect this market to start rolling back over a little bit. All right. Gosh, the gold futures, the gold bugs are loving this. Another new all-time high in gold futures, 1829.8. So almost 1830 for the most part. Still starting to move higher, weaker dollar. People starting to put some money in this safe haven. We might start seeing a little bit of a pop now that we've gotten outside of the value areas and above that 1800 mark, where people that were shorting this, kind of fading the precious metal here, are going to get a little bit nervous, I think. All right, and then bonds are up just slightly. They are pushing up into that 179 handle, as we can see right now. Just settled slightly below that yesterday. We are right at the point of control where I've talked about we've accepted value. That is where the market probably should be. You know, I've been touting around that 180 handle a little bit more, which I still believe in. But, you know, we're less than a point away from that market or that handle. So the market is in its comfort zone, and I do believe that we may see some push up to 183 if we start seeing some more outbreaks, more shutdowns. That's going to cause the economy to slow a little bit. That could cause bonds to move a little bit higher. But in the meantime, stuck in and around this area is kind of where I think that we're going to be holding on to for the foreseeable future anyway. VIX slightly coming off today, albeit barely. I think that we're going to see some more VIX increasing here as it's feeling a little frothy. I talked about that yesterday in the daily market commentary. What happened? We really sold off into the close. That's a pretty bearish sign going forward. Today, we're trying to hold on to some gains here across the board, but I do think that there is going to be some weakness creeping into the market. We can see here the Dow Jones was off 40 just a minute ago, but now we're only off by about 9 points on the day, staying above that 9-day simple moving average. That is short-term bullishness. Yes, there is a magnet right above where we are at 2,700-ish, and that is going to be something that tries to draw the market higher as it acts as a point of control. That's where we get the complacency we're talking about over there in the bonds. We should see a similar situation happening here in the Dow Jones. We're also building a volume node right here at that 2,600 level. I don't know that it's going to necessarily take over this 2,700 level, but if it does, that when we start seeing price accepted lower and that continued down, that is a sign of bearishness. Like we aren't able to achieve that level anymore, and when the points of control move down, that starts signaling, all right, it's a little bit overdone to the upside there. Now, NASDAQ in positive territory, 62.5 points on the day, not making a new all-time high today, but yesterday's market, the way it sold off, I talked about this with the chart setup, settling kind of right around unchanged. Well, that settlement down to the lows there started creating a bit of a topping pattern there. Now, obviously, we are not confirming that at this point. As a matter of fact, we start seeing the bar continue the way we are and strength into the close today. That is going to look a little bit more bullish than, the way it looked at the end of the day yesterday. Now a finish towards the lows, if we start seeing that weakness into the close there, that's going to make it again look like we are confirming that top there. All right, E-mini S&Ps unchanged or slightly higher on the day by about 3 ticks. Again, we can see the bearishness heading into the close. Not quite an engulfing pattern here, but definitely somewhat of a dark cloud on this little bit of a bounce here. And I do think that we are looking for somewhat of a correction here, you guys. I'm not saying a 10% correction. I'm not saying we're pulling the rug out of this market. I'm not saying the economy is falling apart in pieces, but I do believe that there are some pricing out there with some of these stocks that are a little ahead of themselves, and we might see some profit taking and get a little bit of a correction here. So my theory is that we're going to see some correction in the NASDAQ, the E-mini S&Ps, and maybe a little bit more of a bounce in the Dow Jones Industrial Average. So we're going to have to keep our eyes on that going forward. But I do think that we're going to see a little bit more weakness in the S&Ps and maybe a little bit more downside, which is all the same, right? Trying to think of what I was going to say next. We're going to talk about the E-mini S&Ps. There's that weakness almost as soon as I got done with the daily market commentary. The market slid off and finished near the lows of the day. Overnight inventory pretty much flat. The market did rally into the open, but as soon as we got those crude oil numbers at about 7:30, we really started seeing the weakness come in, because that was really showing that there's no demand for that. And if there's no demand for that, that is a signal that the economy may not be firing on all cylinders there. So that's been causing a little bit of weakness coming into the market. Now, let's talk about some trades that I've done. Yes, I'm back in the saddle again, you guys. I can't lay off of it, I guess. I almost wish that I would have stayed in on these trades, because if you guys remember, SPY, I went into the set, bought the 300 puts for about $10 and sold out of those for about $8.80. Now, I'm doing these very small. I'm just doing a bit of a delta adjustment to my portfolio. So I went in again with these same 300 puts in there in the September. Bought the 300 puts for $9.91 today for a pullback. Now, again, I have a very short leash on this. We pop above these this move again. If we pop up here again, that's where I'm going to be out. So I have a defined area of where I am willing to take this risk. I also do expect us to maybe come down and test this 200-day moving average, which is very close to where the point of control is. That lines up with my theory of some of these more frothy stocks are going to come off and put some money into those blue chips there that have been really struggling, to be quite honest. I'm ready to kick Coca-Cola out of my portfolio because it has really just not done anything since I have put that on. And it's about ready to get delisted from Wolfman's portfolio. All right, Tesla, yesterday creating a very nice top. We get that kind of pattern. I picked it out a little bit early in here. And again, probably should have held on to the puts that I had in here because they got that increase in volatility, which almost completely offset the directional move that was against me. If you remember, I went in and bought some puts in there as well. Well, what I did today with this expansion in volatility, I wanted to take advantage of some of that with a little bit of correction. Volatility probably won't necessarily hurt me. And I want to be in this for a shorter duration than what I would do with the long puts, right? I want to take advantage of that theta decay. And if we get any of this volatility coming out, that should help me as well. So I went into the August. Although there is an earnings event in that August, I really am playing this for a shorter move, just a little bit of a correction, maybe to come down and cover these two gaps here. But you remember I got in on this basic shooting star type pattern. Usually that signals that it's kind of blown off to the upside. Well, it blew off again to the upside when somebody else came out and said 1500 was going to be the new area that Tesla visits. Well, we got that move up there. It wasn't able to sustain it. I think a lot of short sellers started coming back into this market, and people that took advantage of that pop. Anytime you get that pop, there's people begging to get out on something like that. A 500-point move or $430 move in a matter of days. That is going to make anybody want to take some profits off of the table. So with that being said, we've got two gaps here, there and there, that need to be covered. And if we get that, I think that we probably will at least come down and revisit this area around 1300 to cover that gap. So I think we're going to see a little bit more of a downside. Maybe not completely cover that gap, but I think that's going to be a target the market is looking for, at least in the next week or so. And that, therefore, high volatility, small correction, volatility may come out of this and help me out. I went into the August, sold the 2050 calls in there for $34.50. I think I sold the low in those right there. And just like I said, a little bit of a correction. To me, this looks like it's a top, and the market is going to pull back a little bit. So again, not completely confirmed. I'm one that doesn't always wait for the confirmation. I usually look for the topping before it gets confirmed. But again, I am going to be looking out if we break above this area right here. So any trade above 1429.50, I'm going to pull the ripcord and be out of this short calls, naked short calls. All right, because I don't want to test it. It's a big dollar one, and I don't want to play around too much with that. I just want to see a little bit of a correction and pull the ripcord on it relatively quickly. That's about all I got for you guys. Just added those two trades. Can't give them up. And I'm playing it again to the downside. I need to get some short deltas in here. I keep talking about the markets being a little frothy, and so therefore I need to add some of that to my portfolio. So without further ado, all I got to say is, well, check out this disclaimer that we've got here. We are an educational company. I am not trying to solicit you guys to short Tesla. I would never dream of that. My assumption could be absolutely wrong in this. All I'm trying to do is teach you how we implement options into our portfolio based on an assumption we come up with. And I just talked about two of those nuances. SPY, I'm looking for a bit of a correction to the downside through my market analysis. That's what we usually do. We have to drill down on what that underlying is experience in that environment. And for that matter, it called for a long put trade, and that's why I went to the shorter duration. In the Tesla trade, I went into the longer duration because I feel like there's a little bit of high volatility. I don't think we're going to see a massive drop in this, but I do think that we might see some little bit of correction or some profit taking going on, which should cause some downward pressure in Tesla. Therefore, that calls for a short call or a short call spread. I just chose to do the short call there. And I did those very small, especially in the Tesla. I did it about as small of a tranche as you can do for my size portfolio. And without further ado, I hope you had a chance to go over this disclaimer. Check out tomorrow, we're going to be doing a webinar. It's the roadmap to building option strategies, you guys. It's a great webinar because I'm going through it just like this. We come up with a directional assumption and find then the right strategy to implement around that assumption. It's not always just picking a directional bias and you pull out the same old option strategy. You can't do that. There's specific environments and specific durations we need to look at in order to increase our probabilities of success with those types of trades. All right? So, without further ado, if you can't take that, take it easy.